500 mid caps, all moving lower here on the day, down about 0.4%. Of course, a big weighting to cyclicals and a big weighting to banks. Both of those main bank indexes, the KBW Bank Index, lower on the day.
Hey, Romain, one group that definitely stayed in the green all day, although finishing off its highs. We're talking about those Chinese names that trade here in the United States. The NASDAQ Golden Dragon China Index up more than 5% at its highs today, finishing the day with almost a 3% gain. And Katie, a lot of it has to do with Tencent, a sales beat coming in better than forecast. And so that name alone was up 7%, almost 7%, and really helped lift the overall sector.
And if you look at industry groups as well, you had semis up all day, you had media and entertainment up all day. Semis in particular, NVIDIA has been having a great run, up for a 9th straight day today. Media, a lot of that comes back down to Netflix, the big rally that we're seeing there. Then you go down the list, and like we were just talking about, it's banks, it's energies. Those are the big losers on the day. Energy off by 1.4%, Carol.
You mentioned NVIDIA. It's up almost 90% so far this year, so we know it's been on a crazy, crazy run. Netflix, though, you also mentioned, Katie, and I want to go there because that is certainly top my radar here. Top of the S&P 500 and NASDAQ 100 throughout the day, finishing with a 9% gain, so just off its highs of the session. No real news. We did have some high volume, but the only news I did see rated new neutral over at Fubon, price target of 322 a share. Stock is just closing below that, so that is certainly on our radar. Want to get to Regeneron. This top name was also top of the NASDAQ 100 and the S&P 500. Has to do with an asthma drug, prescription drug that it developed with Sanofi, Dupixent. It showed some promising results in a high-stakes final stage trial for patients with a chronic lung disorder. So that's enough a rally in Regeneron, up almost 7% in today's session. Jeffrey's saying the drug succeeded where others have failed, so that's why it definitely stood out. Carvana, it's certainly been on our radar this week, rallying again for a 3rd consecutive day. Oh, no, it didn't, actually.
So close.
Sorry, man, darn, I hate when that happens. Finishing the day down about 1%. It was up, folks, a lot in the past couple of days. Analysts continue to digest the online used car dealers' debt restructuring plan. So sorry about that, guys. So 2 gainers, 1 decliner. Mike, take it away.
Yeah, and Carol, if we want to talk about decliners, of course, it's time to focus on the banks again. Looking at Comerica and Zions Bancorp, both down about 9%. This is after an analyst, boy, talk about ripping the Band-Aid off. Truist Securities analyst Brandon King lowered his price target on 28 banks, updating estimates and targets to capture, quote, lower net interest margins, slower loan growth, and higher credit costs. For example, Comerica lowered that price target from 78 to 54, so some pretty big revisions there. Also, a couple stocks we've probably talked enough about today, but I'll tell you where they closed. Block closed down with a 15% loss. This is after Hindenburg Research released a report alleging the payments company facilitated fraudsters, especially with its popular Cash App. Now, Block is threatening to go to the Securities Exchange Commission and explore legal action against Hindenburg for what they call factually inaccurate and misleading report, but investors selling the stock regardless today. Also, Coinbase down 14%. This after they got a Wells notice from the Securities and Exchange Commission about potential violation of securities laws. SEC didn't say exactly what it was, but Coinbase believes it would relate to their staking services, their spot market, Coinbase Prime, and their wallet. So whole lot of different things. SEC Chairman Gary Gensler has repeatedly said that many of these crypto tokens qualify as securities that fall under his purview to regulate, Romain.
All right, take a quick look at yields here. We're down about 14 basis points on the 2-year yield, 10 on the 5-year yield, though you did see a little bit of activity, a little bit of selling on the longer end of the curve, particularly when it comes to the 20 and the 30-year yields. You put it all together here, and you're starting to see significant steepening here on some of the main points of the yield curve. At 210s right now at -40. That's up from where it was just a few weeks ago when it was at -1% here. And that 5s, 10s right now at one point on the day actually flirted with going back into positive territory. I do want to flag something to you guys here across the Bloomberg terminal just a little while ago. The latest update out of the Investment Company Institute on the amount of money, amount of cash flowing into money market funds. We knew that last week we saw about $121 billion flow into money market funds. In the most recent week, $117 billion, so almost matching what we saw in the previous week. 2 straight weeks, put it all together, $238 billion of new cash flowing into money market funds. just in 2 weeks.
And needless to say, that is an amazing amount of money, 2 weeks in a row. And then you think about what really was part of the spark of this banking crisis is the fact that you can get a lot more yield in a money market fund than you can on your deposits at a bank. So clearly, investors are still thinking about that coming into these money market funds in full force.
And at the expense of a lot of those prime funds. I mean, we're seeing the prime funds really take a beating here because, of course, they're exposed to some of the corporate risk there, unlike some of the money market funds, which are primarily government debt.
Yet at the same time, we've seen, right, investors moving into some of the big tech names, you know, over this volatility that we've seen over the last couple of weeks. So it's interesting to see that and then cross it with a trade like that, Mike.
Yeah, remember how much we used to talk about the hunt for yield. Who would have ever thought that hunt would end up in the money market funds? I think there is a bull case for all that cash sitting in money market funds, though, Romaine, is that let's look at as dry powder that eventually might come back into the stock market.
Yeah, or might not. I mean, I know you're a glass half full kind of person, but I mean, that's a lot of money, and that's been a trend. And we should point out, this is just 2 weeks, and it's extreme, obviously, but the trend has been higher, really, for quite some time here. And I guess the question is, what is the catalyst that gets that quote-unquote dry powder back into riskier assets?
It's a great question. Is it a pivot from the Fed? Do we actually have to see them not just pause, but cut rates? I don't know. I kind of agree with Mike here that you could look at this and say this is dry powder. Just a fantastic amount of money has been stuffed into these funds. But remember, when you think about in S&P 500, if we get back to 20% gains in a single year, which we were kind of getting used to, I would imagine that money might come out pretty quickly.
You know what the solution is? We see bank stocks settle. I mean, Jim Bianco had a great tweet on earlier and just talked about bank stocks breaking down again today and is kind of being cheeky, but saying, sure, glad the situation is stabilized. I mean, the point is we continue to see losses there. There's nervousness. You know, I think investors still wondering, okay, now what? I mean, even Jane Fraser talking with David Rubenstein, Jane Fraser, of course, head of Citi, saying, you know, there could be still some small banks maybe, you know, that there could be some problems. I think we just don't know what we don't know in the banking sector, and that's going to be a drag until we have better clarity.
Yeah, and one of the issues is all the aggregate macro data for the banking sector that comes from the Fed is very far delayed. So we really need to see how bad this deposit bleed has been and get a sense of how bad it could be going forward. I think people are going to be parsing those Fed H8 reports a lot more closely than normal.
But this gets back to the idea of sort of what stops that bleed. What stops that bleed is higher rates. But then, of course, that means then, well, you know, kiss your net interest margin goodbye. I mean, we were talking yesterday. I mean, KeyCorp put out their regular statement here. Their prime lending rate now at 8%, and they're not alone. I mean, most everyone else is in that same boat in the 7% range here. And the idea that the only way you're going to attract folks back is to raise that rate.
Right, exactly. So it's not easy, right? It complicates it all. All right. Obviously, we're going to continue this conversation. We ain't over when it comes to the bank situation. So we'll be back certainly tomorrow. Beyond the Bell, our cross-platform coverage, radio, TV, on Bloomberg Originals and Bloomberg YouTube. We will see you again, the Friday edition of Beyond the Bell, 4 o'clock, Wall Street time tomorrow. Used by 150 million Americans alone in the crosshairs of lawmakers today up on Capitol Hill. TikTok CEO Shou Shu was up on the Hill today defending his company against a barrage of criticism from hostile U.S. lawmakers, repeatedly asserting the app's independence from its Chinese owners.
I have seen no evidence that the Chinese government has access to that data. They have never asked us. We have not provided.
Well, you know what?
I
find that actually preposterous.
I have looked in, I have seen no evidence of this happening. And in order to assure everybody here and all our users, our commitment is to move the data into the United States to be stored on American soil by an American company, overseen by American personnel.
All right, that's the TikTok CEO, Shou Shu, up on Capitol Hill earlier. You also heard the voice of Anna Eshoo. She's Democratic representative from the state of California. Some back and forth in that questioning that got heated at times. So let's get to it. Joining Mike and myself, Bloomberg News technology reporter Alex Barinka joining us right now. She's been up on Capitol Hill. So, all right, Alex, first of all, a lot to get to. Tell us about the mood in the room, how packed it was. Paint the picture for us.
Carol, it was packed to the brim. Folks were overflowing. We were jockeying for seats, even as credentialed media. And sitting right behind TikTok was also kind of a slew of creators. All of these folks got to witness what I would say is probably one of the more contentious congressional hearings that we heard. There was a lot of cutting off of the CEO when he was trying to give answers, a lot of pushing to try to get him to commit to these yes or no questions. Do you have any relationship with the Chinese Communist Party? Who is prepping you today for today? Was there anyone from China in doing so? There was also a lot of emotion, both when it came to the protection of U.S. American users' data, which those national security concerns have been top of mind. But there was also some really kind of emotional moments talking about the impact that social media can have on teens, particularly around users who are posting about suicide on the app. So very high stakes moment and a lot of tension in that room between the CEO and the lawmakers who were not holding back in firing questions his way.
Alex, I'd love to unpack a little bit that notion of the personal data. That seems to be one of the main linchpins here that angers politicians about TikTok is all this personal data. I got to say, I've got 3 teenage daughters who are all TikTok addicts. I don't know what data they have that the communist China would be interested in, but obviously that's probably not what's worrying people. What is the type of data that's so precious and so dangerous to leak from TikTok into China?
So today we heard folks talk about IP addresses, which is kind of could narrow down your location, GPS data, and that additional location data. And then you had some questions from TikTok CEO Shou Chew himself saying, what else should I be kind of helping protect U.S. user data for? You asked this question, Michael, and it's one that a lot of folks have talked about in context of TikTok. There being national security concerns about data. The company feels like they are doing as much as they can to protect American users' data. They would argue more than any of their peers by basically setting up this firewall with Oracle to bring all Americans' data onto U.S. soil. You saw him push back today in the very few times that he did push back, basically saying some of these concerns that you guys are alleging, they're hypotheticals. If you give us more specific information, we can kind of work for that. So, young folks might say TikTok and everyone under the sun has my information, but when that argument came up today in the hearing, lawmakers pushed back and said, well, we're not here to talk about everyone else. We're here to talk about TikTok.
Well, there is something to be said to, can't the government, we work for a company where we have to secure our information. A lot of companies do. I mean, can't the government institutions basically kind of create firewalls around these applications and maybe, not allow employees to use it? And that's a way of kind of protecting themselves?
Absolutely, and federal workers cannot actually use TikTok on their phones after that legislation passed. But we heard something along those lines of kind of comprehensive legislation around data policy be brought up today. Honestly, that was the argument that CEO Shou Chew was trying to push to broaden this conversation outside of just TikTok. We did hear a little bit of that, not that they were friendly voices, but voices along the lines of comprehensive legislation from both sides, from Greg Pence on the Republican side, from Darren Soto on the Democratic side, who both kind of echoed this idea that there should be kind of bipartisan legislation that looks at all tech companies. Pence actually came out and said, hey, this is my 32nd hearing that I've been in about tech companies and data. So the push is there, but the problem is TikTok is being seen as kind of a bigger threat right now. And all of those things, those concerns that swirl around regular social media companies, what data do they collect? What are they showing me? Who is influencing me? Where do the ads come from? All of those concerns have been made kind of way more sinister because of this kind of ratcheted up fear of China and those hypotheticals of what could they do if they got your information.
Alex, it's such a sort of perilous political topic because it does seem like there's bipartisan support to do something about TikTok. But on the other hand, no one wants to lose those, millennial Gen Z voters who are addicted to the app. And I know from your coverage and elsewhere, there's several competing bills floating around Washington about what to do. Do you have any sense of where that's going? Is there one piece of legislation that you think has a better chance or is gaining more support than the others?
So the bill from Thune and Warner, which has backing by the Biden administration actually said, send that to Joe's desk and we will kind of make some moves on it. That seems to be the one on pole position. I'll tell you, the representatives in the room at the hearing were not the only ones who are kind of piling on to the anti-TikTok sentiment today. We have messages in our inbox from those senators on that bill who are excited to see the bipartisan kind of flogging that TikTok had to take today in that hearing room, saying, hey, we should push this bill. So those folks are moving forward. They largely say that these national security concerns, these concerns around China, are more important than the 150 million people who enjoy, interesting videos on the app. The voters, I talked to some creators that TikTok brought down here, about half a dozen of them. I asked all of them, have you talked to your representative? Have you talked to your senator? If they vote against TikTok, will you vote for them? Unequivocally, all of them said, my vote would be up for question for those individuals if they pass a bill that bans the app and removes it from my phone here in the U.S.
Alex, if this was a German company, a Japanese company, pick your country other than China, would we be going through this process? Would the CEO of a non-Chinese TikTok be going through this?
China seems to be kind of the focus right now. I mean, last night, just across the lawn from the Hill was a group of VCs and lawmakers meeting at a private dinner where Peter Thiel, the billionaire and venture capitalist, was talking about the risks of China, calling TikTok, likening it to the homeless problem, as he called it here in the U.S., something that we cannot get away from. So that kind of rhetoric has ratcheted up around this country in particular. You've also seen it with the chip deliberations in the semiconductor industry. So this seems to be kind of the focus right now, and we're not hearing it about those other countries. So China seems to be kind of number one on that list.
20 seconds, now what? Now what happens?
Now what happens is the company will probably be jockeying to get this legislation off the table. I don't think that's going to happen. We saw such an uproar today. It seems like they lost ground on their argument to garner trust from the U.S. government. So we'll be kind of watching and waiting for next steps on bills and any additional national security review as a result from the testimony today.
All right, well, some great coverage and reporting. Alex, thanks so much. Alex Barinka, technology reporter at Bloomberg News there, I believe in our D.C. bureau after spending time up on the Hill listening and watching that testimony. I don't know.
I think you need to get on TikTok, Carol.
No, I don't.
Do some dances and you worried about your data?
Tain't gonna happen. I don't even have time to do it. I don't know how people have time to do it. All right, Carol Master, Mike Regan, you're listening and watching Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here on Bloomberg, and we begin with a developing story, a headline breaking right now on the Bloomberg Professional Service. Credit Suisse and UBS are among banks facing a U.S.-Russia sanctions probe. That story breaking right now. We'll have more details as they become available, but that headline certainly catching the attention and worth repeating. Credit Suisse and UBS among banks facing a U.S.-Russia sanctions probe. Turned out to be an update today. Choppy session. The Dow ended the day with a gain of 75 points, up 0.2%. But at the best level of the session in the early going, we had the Dow higher today by 481 points. The S&P was up 11. That was a gain today of just about 0.3%. NASDAQ, though, the outperformer today. NASDAQ, the composite index, up 117, up today by 1%. Bitcoin up 2.9%. 28,181 on Bitcoin. The 10-year 3.39%, with the 2-year yielding 3.79%. Gold at $19.95 the ounce, up 1.3%. The precious metal was trading back above $2,000 the ounce. West Texas Intermediate crude down 2.3%, $69.30 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that. You are listening and watching Bloomberg Business Week on this Thursday, brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Thousands of small businesses benefited from a payroll tax refund and beat the odds of shutting down their organizations. This refund is not alone and could help your business weather rising inflation and supply chain issues. To learn more, head to getrefunds.com. Well, pharmaceutical ads, have you seen a few?
Oh, absolutely. Just the fast-talking side effects at the end. You know.
About all the, yeah, exactly. You always have to kind of slow them down. I think even Jimmy Kimmel made a joke about them at the recent Oscars. Our Bloomberg Law team noted about a year ago that drug makers advertise drugs through TV and other media to encourage patients to ask their doctors for specific medications. In that story, our reporters citing a GAO report on how manufacturers spent about $6 billion each year for a total of $17.8 billion on direct-to-consumer advertising for more than 550 drugs from 2016 to 2018. They spend a lot. That's the bottom line. So looking at pharma advertising, a new study led by researchers at the Johns Hopkins Bloomberg School of Public Health. Joining us right now to talk about it is Gerard Anderson, professor in the Department of Health Policy and Management at the school, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. He joins us now via Zoom in Washington, D.C. Gerard, nice to have you here with us. Tell us about this study, what you looked at and what you found out.
Sure, it's good to be back. So there are only 2 countries in the world that allow direct-to-consumer advertising, the United States and New Zealand. And so what we wanted to understand is, why are they doing this and what's so important? And as you said in your introduction, many of us watch it on television, and my wife and I were watching it on television, and I would look at them and I'd say, why are they spending so much money on advertising? And if you looked at the fine print on TV or something like that, you'd see that many of these drugs really don't work very well. They do a little bit better than nothing, but they don't work very well. So we wanted to take a look at whether or not they actually are very good compared to the drugs that are other ones that are also being provided. And it turns out that most of them are not. And it sort of makes sense. They're going to go to the consumer when they can't go to the physician, because the physician knows that the drug isn't particularly good or is equally good but much more expensive, and so is not going to prescribe it. So you go directly to the consumer and you say to them, go ask your doctor. And the doctors hate this because they know that the drug is either much more expensive and therefore not good for the patient, or not as good or just as good as another drug. So we basically published a paper that said, be cautious when you watch an advertisement.
Well, right, Jerry, because it seems like it must work, right? They wouldn't be spending this type of dollars if it wasn't working. So are some doctors able to be convinced, I guess, or is it that some patients, maybe I'm a hypochondriac. Sometimes I'm watching the commercials and I'm like, restless legs? Do I have restless legs? What
We all do.
How does this work that the doctors actually end up prescribing the drugs that patients are seeing on TV?
So you got to understand how much these drugs cost. Some of these drugs are $10,000. Some of these drugs are $50,000. Some of these are drugs for more than $100,000 or more. So if you just get a few patients watching this ad, going to the doctor and saying, you should, prescribe this drug for me. And doctors really don't like to disappoint their patients, so they do. So if they can just get a few patients that decide to do this, they've made money on this particular ad. So they're going to do this just because of the high prices of these drugs that are being advertised on TV.
So where are regulators on this? Like, why isn't the FDA in their analysis creating some kind of metric, especially when there's maybe a couple of drugs used for some ailment, and saying this one's more effective than this one? Why isn't that part of it?
Because the FDA is not responsible for doing that. In fact, there's nobody in the United States responsible for making that decision. We have, unlike other industrialized countries where there are entities sponsored by the federal government, sponsored by insurers, sponsored by a variety of things that make those recommendations to people, we in the United States don't have anybody making those recommendations. The FDA says the drug is safe and effective, or efficacious. That's what it says. It doesn't say it's better than another drug, it's more expensive than another drug. It is just saying this drug is safe to take, and that's only the responsibility they have. There's nobody saying, well, you could take this drug, but it's not quite as good, or you could take this drug, but it's 3 times more expensive. There isn't anybody out there in the United States that essentially is making that recommendation to people.
Jerry, one line popped out at me in this story. It says, since 1996, annual direct-to-consumer advertising budgets for prescription drugs have increased from $1.3 billion to $6 billion in 2016. And I'm thinking back to the 90s when there was sort of a lot of scandals, I guess you could call it, about drug reps, who would go and wine and dine doctors and take them golfing or take them on vacations. And there was a big backlash to that and a crackdown on that. Do you think this is sort of the modern version of that? Is this how the drug companies are sort of getting away from that problem and creating a new one?
Well, so they're still allowed to wine and dine the physicians and whatever. They just have to report it. So they're still able to do that. Some places like Johns Hopkins don't allow the pharmaceutical reps into the hospital, but many places do. But what they're saying is, these are very profitable drugs for us. We're going to try everything we can to get another prescription written. And so we'll go to the doctors, but we're also, for these drugs which are not quite as effective or are much more expensive, we're also going to go to the patient and get them to lobby their own doctor. Well, give me this drug. I've read it on TV. I saw it on TV. I should be taking this drug. Why aren't I taking this drug?
Well, Jerry, what about doctors, though? I mean, doctors, I would assume they take the Hippocratic Oath. They want to do best by their patients. So if they have a buffet of drugs, they're going to go for the one that is going to be, I would assume, best for their patient and do the most. Isn't that kind of the stopgap?
That is the stopgap. But now think of yourself as a doctor. You have a patient comes in and says, I want this drug. And you could sit there and spend 25 minutes explaining to them the science behind the 2 drugs and why this other drug is better or less expensive. Or you could just say, okay, I'll give you the drug that you want. It's going to cost you more. It has less effectiveness, but if you want it, I'm going to give it to you. I mean, it's the same as, we talk about obesity, and the doctor should talk to us about obesity and a whole variety of other things, but it would take a long time and you might alienate some patients, and some patients would say, well, if this doctor doesn't want to give it to me, I'm going to go to another doctor.
But don't insurance companies too kind of weigh in? Like I've seen situations like, hey, you can use the generic. Yeah. Like don't they play a role here?
They do play a role. It's called prior authorization. And what they say is, you've got to try this drug before you take this drug. And so they're making it hard to get the more expensive or the less effective drug. But still, the doctors lobby, in some cases, the insurance companies. And in most cases, the insurance companies end up giving up and saying, oh, okay, you know this patient better than we do. And, you've now called me 3 times and bugged me for this patient. And therefore, yes, we'll give you that new and expensive drug. You just get lobbied enough as an insurance company, and you don't want to be known as the insurance company that always says no.
Do we all have restless leg syndrome? That's what we really want to know. Mike's convinced we all have it. Jerry, no, I think it's an important situation because you're right. We all see the ads. They're often out there big time. And it's interesting that we've got to be smart and not be sold to. What?
Interesting point this story makes, too, is that the U.S. doesn't have comparative effectiveness rating like other countries do. And that sounds like maybe that's an issue that the U.S. needs to get on board with.
I'd love a rating. I'm looking at something and saying,
is this thing really worth it?
Yeah, exactly. I think it would be really smart. And it would be a lot more transparent, if you will. Jerry, thank you so much. Jerry Anderson, professor in the Department of Health Policy and Management at Johns Hopkins Bloomberg School of Public Health, joining us from Washington. All right, you are listening to Bloomberg Business Week. Let's get another check on world and national news. Off to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. China is the primary driver of the Pentagon's latest budget. Defense Secretary Lloyd Austin told lawmakers on a House Appropriations Subcommittee today the $842 billion request this year is aimed at modernizing and increasing our force in Asia.
Our budget builds on our previous investments to deter aggression by increasing our edge. We're investing in a more resilient force posture in the Indo-Pacific and increasing the scale and scope of our exercises with our partners.
Austin says the budget proposes to spend more than $9 billion to build up military capabilities in the Pacific. That's a 40% increase over last year. This evening, President Biden heads north of the border for his first trip to Canada since taking office. Bloomberg Government's Jack Fitzpatrick reports there's lots to agree with Prime Minister Justin Trudeau, including Ukraine, climate, and security issues.
There are other issues that might be tougher, including the implementation of the CHIPS Act, with Canadian concerns about their own economic ability to supply those chips as the U.S. looks to depend more on its own production.
Bloomberg Government's Jack Fitzpatrick reports Biden and Trudeau will also likely discuss the banking turmoil. A judge in New York City says Donald Trump's habit of calling for protests against his detractors warrants the use of a rare anonymous jury at his sexual assault trial next month. Last week, Trump called on his supporters to protest what he described as his imminent arrest in a separate case and urged them to, quote, take our country back. The judge says that has been perceived by some as an incitement to violence. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
Connection lost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, and we continue with a developing story after ours. We brought you the news a few minutes ago. Credit Suisse Group and UBS are among the banks under scrutiny in a Justice Department probe into whether financial professionals helped Russian oligarchs evade sanctions. This all according to sources after ours. I'm looking at a 6% drop right now in ADRs of UBS. Credit Suisse after ours. Right now, Credit Suisse down by about 5.5%. Turned out to be an up day on Wall Street. A wild day, big swings. At one point, we had the Dow up as many as 481 points. That advance evaporated at one point before closing higher by 75 points. The Dow ending the day with a gain of 0.2%. S&P briefly negative today, ended with a gain of 11 points, up by about 0.3%. NASDAQ today higher by 1%. Bottom line here, stocks were whipsawed and they struggled for direction as banks remain lower, even after Treasury Secretary Janet Yellen said in prepared remarks to lawmakers that the U.S. is ready to take further measures to protect deposits if needed. Now, what about the overall health of the banking sector? Amanda Agati is Chief Investment Officer at PNC Asset Management Group, and she was our guest right here on Bloomberg Business Week.
Sure, there are signs of stress building in the system, but on balance, we feel like the industry is in pretty good shape. I mean, of course, we're watching financial conditions tighten here. Fed took a step, further in that direction. So I'm not saying that we're, out of the woods yet, but, I think on balance, we're in pretty good shape.
S&P 500 index up 11, a gain of 0.3 again. The Dow up 0.2% today. NASDAQ up 1%. 10-year yield 3.40%, with the 2-year yielding 3.82%. Gold up $22, the ounce up 1.1%, $19.92. And West Texas Intermediate crude down 2.1%, $69.38 a barrel. Sources tell Bloomberg Apple plans to spend $1 billion a year to produce movies that will be released in theaters, part of an ambitious effort to raise its profile in Hollywood and lure subscribers to its streaming service. Apple, meanwhile, said to be considering bidding for the streaming rights to a range of English football games, a move that would step up its sports ambitions and increase competition with Amazon's Prime Video. Again, recapping, stocks higher, S&P up 0.3, the 10-year yield 3.40%. And that is a Bloomberg Business Flash.
All right, really appreciate that, Charlie. And Charlie Pellet there, of course, laying out some of the Apple news, which we want to dig a little bit deeper into. As he noted, Apple shares were up more than 2% at their highs today, finishing there with about a 0.7% gain. But the story about Apple now planning to spend about $1 billion to produce movies that it will release in theaters, according to folks in the know. So let's get to it. Let's head to our LA bureau, where we have Bloomberg News technology reporter Mark Gurman, our go-to when it comes to all things Apple, joining us via Zoom. So Mark, tell us about Apple's plans.
Yeah, thanks for having me. So my colleagues Tom Buckley and Lucas Shaw are reporting this news, where Apple's upping its budget for theatrical, for full feature-length movies. That's between an hour and a half and 2.5 hours. To $1 billion annually. Now, that's not nearly as much as what Amazon, Netflix, and others spend, but that's quite a hike for Apple. Apple, as we probably know, has traditionally stuck to some of the shorter series and shorter documentaries, right? There's Schmigadoon, there's Severance, there's Ted Lasso, there's the upcoming Idris Elba TV show series, right? So they've got a little smaller in terms of length. Now they want to go longer. And I think what really inspired them to do that was Coda, right? They spent high double-digit millions to buy that from a film festival, and it ended up working out spectacularly for them from a marketing perspective. Obviously, the Oscars, some people think they're not as important these days, but I still think that's the cream of the crop. For the most prestigious award you can get is the Oscar for Best Picture. And Apple's Coda did that, not this year, but in 2022. And so I think that inspired them to want to do more feature-length movies. You saw Emancipation with Will Smith. They're bidding on a Scorsese film for about $250 million this year as well. So you'll see a lot more on the movie side from them.
Mark, it seemed like Hollywood was moving in the other direction for so long, putting streaming first, and theater releases were just kind of an afterthought. So I'm curious, is this, do you think, in a way, I don't want to say gimmick, but a way for them to sort of market their streaming service? I mean, does it all, at the end of the day, come back to Apple TV?
I don't even have to be on here because you described it so well, exactly as I would, right? It is a marketing exercise. It is a gimmick, right? They want to sort of get that crowd that's coming to the theater to subscribe to TV Plus. So the idea is, all right, you come to a movie theater, you're paying, what, $20 a ticket, maybe a little less, maybe a little bit more. And then you see an advertisement, you can get this film and so many others for $7 a month. Right? That's kind of a steal. That's a great deal when you think about it. And that's the message I think that Apple wants to get across. So it is a marketing exercise for the company more than anything. There also are some award shows that require the movie to air in theaters for a certain period of time. So that's another component there. And then there's also certain big-name actors, there's certain big-name producers who are very much against doing straight-to-streaming content. If you remember, Apple had Greyhound. That is the big Tom Hanks movie that came out a couple of years ago. And Tom Hanks made his position known, right? That he does not want this to be a straight for streaming movie. He doesn't necessarily believe in that. What ultimately sold him is that this was deep in the COVID pandemic times, right? When people were in lockdown in many parts of the world. In order to get this film out, they had to put it somewhere. They went TV Plus. Obviously, TV Plus was willing to pay the most. Money talks in this business. So I think you have, you're not going to find bigger actors than Tom Hanks, right? And so if you want to get people like Hanks and other people of that ilk, you might have to promise them that these films are going to go into theaters too, because they're old school and they believe in that. So I think, from those three standpoints, it's important for them to do this theatrical push.
Well, the theater companies, I'm looking at Cinemark Holdings up almost 6% in today's session. They're saying, thank you very much, Apple. We needed that little boost. Does it make sense to you, Apple, this strategy? I know what you guys were just talking about, it being a marketing ploy. Does it really make sense? Do you think it will be as productive as maybe Apple expects it to be?
I think it really doesn't matter, because what's really important here is the content, right? And whether or not they ultimately play these in the theaters, whether or not they perform well in theaters or the marketing works out the way Apple wants because of the theaters, the content is still going to be on the streaming service, and they're going to be buying the best stuff they can get their hands on with their big checks. So I think it really comes down to the content more than anything.
Mark, I'm a big Ted Lasso fan, as I think many people are. One of the breakout hits from Apple TV.
Love Ted Lasso.
Right? How big of a success story is that for Apple, especially when it relates to ambitions to sort of take this entertainment business to the next level?
I mean, Ted Lasso proved that Apple could come out with a cultural hit that people really like. I was at a conference in LA about a year ago, and Ted Sarandos, who's one of the Netflix co-CEOs, he was asked about what he likes about other streaming services. And so you had the co-CEO of Netflix up on stage, name drop Ted Lasso, right? And so you're not really going to get a much better acknowledgement than the co-CEO of Netflix approving one of your shows. Right, almost saying, "Hey, we wish we had that one." And
so I almost wonder if it played a role in why they added the Major League Soccer too. It seems like a little bit of synergy there.
I don't know. I think on the sports thing, they really are trying to grab whatever they can get. They wanted the NFL, that didn't work out. They've wanted NBA, they're still talking to the NBA. They have MLS, okay? They have MLB, and so they want to push. We had a story out today about them looking for English Premier League, English Football League as well. And so we'll see how that bidding works out. But they've got so much money, they're going to throw it at whatever content they can get to make that subscription more and more valuable, and maybe over time give more reason to up that subscription price. At the end of last year, they upped the Apple TV price from $5 a month to $7 a month.
Yeah, to make it sticky and make you wanna make sure you're on it. I gotta say, Apple TV Shrinking is another one, which has a Ted Lasso connection as well. Hey, Mark, thank you so much. Really appreciate it. Mark Gurman, he's technology reporter at Bloomberg News, joining us from our LA bureau via Zoom. Check him out on Twitter at Mark Gurman, and of course, always on the Bloomberg terminal at Bloomberg.com. Interesting, right? All about content.
Yeah, Shrinking, you said?
It's great.
That's a comedy or
Harrison Ford, Jason Segel.
Oh,
yes.
I'll have to check that one out.
So well done. All right. Mike Regan, I actually told you something. You know so much. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg Credit Suisse Group and UBS are among the banks under scrutiny in a U.S. Justice Department probe into whether financial professionals helped Russian oligarchs evade sanctions. Block shares tumbled 14.8% today after Hindenburg Research said it is betting on a decline in the stock, alleging that the payments company led by Jack Dorsey facilitated fraudsters who took advantage of government stimulus programs during the pandemic. Block is fighting back, threatening legal action. Again, the stock today down 14.8%. Ford is predicting losses in its electric vehicle business will grow to $3 billion this year as it spends big on new models and factories. And with more, here's Bloomberg's John Tucker.
Charlie, the deficit matches its accumulated EV losses over the past 2 years. The automaker issued guidance today on its EV unit, as well as performance for its traditional internal combustion engine and commercial operations, as it moves to start reporting financial results by business unit rather than region. The company is keeping its profit forecast for the current year unchanged. Ford is the #2 seller of the EVs in America on the strength of its F-150 Lightning plug-in pickup and battery-powered Mustang Mach-E. But it is miles behind Tesla, which controls 2/3 of the U.S. EV market. Charlie?
And that's John Tucker reporting today. Ford shares tumbled 0.5%. Ford down 6 cents to $11.42. Those are some of the company stories we're following this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this Thursday. Carol Master along with Mike Regan. More to come in just a moment. First up, though, let's get back to world and national news. Nancy Lyons in our 99.1 newsroom in the nation's capital. Hey, Nance.
Thanks, Carol. The CEO of TikTok, Shou Chew, spent hours under the bright lights on Capitol Hill today as the U.S. considers banning the popular app that's owned by Chinese-based ByteDance. Members of both parties appeared skeptical about Shou Chew's assurances that the app protects data for kids and that TikTok is not beholden to the Chinese Communist Party.
Chairwoman Kathy McMorris Rogers called for TikTok to be banned. She asked Chew about China inserting propaganda.
Are you 100% certain that they cannot use your company to promote such messages?
It is our commitment to this committee and all our users that we will keep this free from any manipulation by any government.
If you can't say 100% certain, I take that as a no.
Ranking Democrat Frank Pallone said of Chew's assurances,
I don't buy it, right?
2/3 of American teenagers are said to use TikTok. A bill co-sponsored by both members would stop all social media from collecting data on children under age 17. In Washington, Irv Chapman, Bloomberg Radio.
More delays in the Manhattan investigation into alleged hush money payments by former President Trump to porn star Stormy Daniels. The grand jury investigating the case did meet today, but reportedly did not take up the Trump matter. It's unclear why it wasn't being discussed. Grand jury investigations are shrouded in secrecy, with prosecutors prevented by law from sharing any details of what takes place behind closed doors. Researchers are out with information concerning long COVID and who is most at risk. They discovered women, overweight people, and those over the age of 40 were at the highest risk of developing long COVID. That's when symptoms continue 3 months after an initial infection. Also at risk, patients who have pre-existing conditions like asthma, diabetes, and even anxiety or depression, and those who were previously hospitalized or admitted to intensive care for COVID. The findings were published in the Journal of the American Medical Association's Internal Medicine publication. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carol and Mike.
All right, Nance, thank you so much. Carol Master along with Mike Regan. Well, March, as you know, is Women's History Month. Every day this month, we're celebrating significant moments in women's history. So let's get your installment for this Thursday, March 23rd. Here is Bloomberg's Lisa Mateo.
On this day in women's history in 1917, English author Virginia Woolf establishes the Hogarth Press with her husband Leonard Woolf in the dining room of their home. Printing was a hobby for the couple, who bought a hand press and taught themselves how to use it. The publishing company was named after their house in Richmond, London, where they began hand printing books. The first text was a book with one story written by Virginia and the other written by Leonard. Between 1917 and 1946, the press published 527 titles. Wolf's love for writing began at an early age, as she was homeschooled in English classics and Victorian literature. She later attended the Ladies' Department of King's College London and began writing professionally in 1900. That's Today in Women's History. I'm Lisa Mateo, Bloomberg Radio.
All right, Lisa, thank you so much. You are listening and watching Bloomberg Business Week. Carol Massar along with Mike Regan. And I just want to remind everybody, I know our team has been breaking down these headlines, Mike, but we did get just a little while ago, maybe it was after the closing bell, banks reducing their borrowings only slightly from 2 Federal Reserve backstop facilities in the most recent weeks, a sign that institutions are taking advantage of the central bank's liquidity in the wake of turmoil. So still tapping into that ability to access Fed funds.
Yeah, that discount window. That discount window at the Fed, it used to be a stigma to going there to borrow,
right?
But not anymore. I mean, I guess it's good to have it there when you need it, and there's so much bank data